Alright, what's up guys? So this tool right here is something I've been working on for a very long time, and it's one of my most important tools in my trading. The new and improved backtesting template is finally here, and I'm going to be sharing it with all of you completely free. This is going to be a quick video explaining to you guys how you're supposed to be using this very powerful tool. You don't need any experience with Excel. It's quite easy to use. So first of all, what you have to do when you get this, so the link will take you to a Google spreadsheet. And the first thing you have to do is you have to go to File, Make a Copy, and then create a copy so you have your own copy. You will then be able to edit this. You will not be able to edit the original file. You should not be able to do so. So you have to create your own copy before you can start editing it. Okay, so you have now used the file in the newsletter and you have copied the spreadsheet. And by the way, if you're watching this video on YouTube and you don't know where to get this backtesting template, you sign up to my newsletter. That's where you're gonna get this newsletter. All right, so let's take a look at this, right? So the whole idea, like first I kind of want to explain the importance of backtesting and the different reasons why you want to backtest your system. And even if you already have a profitable system or if you're creating a new system from scratch. When you're creating a new system, you obviously need to test everything to make sure that it's actually profitable. You have to test different indicators to see which indicator works best with other indicators. Let's say, for example, you have a break and retest system based on horizontal support and resistance. You're a trend following trader. You have resistance, price breaks resistance to the upside. The idea would then be to buy that retest of that previous resistance, now hopefully turned into support. So you have to test, which indicator is confluent with that bounce and which indicator gives me higher probability that the retest will actually bounce. And this is a backtesting template which will work great in testing different indicators at the same time to see which one gives the best probability over a long course of time, over many trades in a row, of that bounce actually being the most probable bounce. But let's say if you already have a profitable system, why would you want to backtest a system that you already know is profitable? Well, for several reasons. First, the psychological reason of becoming confident with your system. So imagine that you're in a losing streak and it just feels terrible. You're not really sure that your system is performing as well as it should be. If you take a break from trading and you instead of doing live trading, you take a step back and you do some back testing. So you back test the same period where you have that losing streak to see if the trades in the backtesting session would be more profitable than your live trading. Because as you know, when backtesting, it's much easier because you don't have those mental, emotional problems when trading. And in live trading, you might be influenced by your emotions. So backtesting kind of takes that away. Now, if that backtesting session is more profitable than a live session, you know that you're probably losing because of your mental edge not being on point. And if you see that you have the same results during the backtesting session, you can be sure that it's just a normal losing period of your system, right? So backtesting is a good way to check if your mental balance is in check and you have that mental edge working for you. It's also a great way to become confident in your system. Doing long-term historic backtesting will confirm the profitability of your system long term, which will make it much easier for you to get through the losing periods. All right, so let's take a look at the actual template here and how you're supposed to use it. I'm going to explain all the different parts right here. So first of all, this right here is where you enter all the details of your trade. So obviously you're looking at your trading view chart and let's say you're taking a trade and the result of that trade is a 2R win. Now, if you don't know what risk to reward is, you should go to YouTube, you should search for risk to reward, risk management, that sort of stuff. That is crucial that you understand before you start using a backtesting template like this one. So imagine if your trade is a 2R winner, which basically means you're making 2 times the amount that you're risking. It's a 2R winner. Right, 2R winner. Now, as you can see right here, you have confluence 1, confluence 2, confluence 3, and confluence 4. And up here, you can select what you want to track as confluence of the trade. So let me give you guys some examples right here. So on the first one right here, we're going to be typing in 4-hour 20 EMA. The next one, we're going to be typing in 4-hour 50 EMA, and the next one we're going to be typing in the 0.618, and then we're going to be typing in the 0.5. So basically what this is the 4-hour 20 EMA, the 4-hour 50 EMA, the 0.618 Fibonacci retracement level, and here is the 0.5 Fibonacci retracement level. Let's look at a recent trade that I've taken right here. It's CAD-JPY, and let's assume that this is the 2R winner, right? So let's say it hit that last TP. This is now a 2R winner. So how are we gonna put this into the backtesting template? So we had 2 confluence looking at the 4-hour 20 and the 4-hour 50 EMA. This is the 4-hour 20 and this is the 4-hour 50 EMA. So what I'm going to do right here is I'm going to say that this trade was confluent with, it's not perfect, I'm just using an example right here, but let's say that this trade right here is confluent, the entry trigger is confluent with both the 20 and the 50 EMA. So let's go back to the backtesting template right here, and we're going to put in confluence 1 is going to be a 1 as a yes. So is the trade confluent with the 4-hour 20 EMA? If yes, that's a 1. You go to the next one, confluence number 2. If the trade is confluent with the 4-hour 50 EMA, you put in a 1 as a yes. Now we go back to the trade and we have 2 more confluence to look out for, and that is the 0.618 and the 0.5. So let's say that did the entry have any confluence with the 0.618 or the 50% fib? And so let's say, for example, trade comes down, let's say that the fib is like this, right? And the trade comes in and it bounces off the 50% fib, the 0.5 fib, but not the 0.618. So what you do is you go here and you look at confluence number 3. That's a 0 because it's a no on 0.618. It did not bounce on the 0.618. However, it did bounce on the 0.5 fib. So that is a 1 on the confluence number 4, which is for the 0.5 fib. Now that we put all of these in right here, you have 4 different, well actually 5 different windows right here. You have the confluence analysis for the confluence number 1, which is the 4-hour 20 EMA. Same for the 4-hour 50 EMA. Same for the Fibonacci retracement level 0.618 and the Fibonacci retracement level 0.5, the 50% level. So as you can see right here, we only have 1 trade. So the win rate of trades that hit confluence 1 is 100%, same for 2, and the 3, which is, it's 0% win rate. We don't have any trades hitting the 0.618 yet. And then the 51 trade, 100% win rate. This one right here is interesting because this window right here will show you the win rate and cumulative R profitability of the trades where all of these is 1, right? So this is a great way of trying to find which confluences works best. So you can track 4 different confluences in a trading setup, and when all of those confluences hit and you have that perfect setup, is the win rate actually better on a perfect setup than if you would only go with 2 confluences or 3 confluences? So with time, when you fill up this backtesting template, you will see if that idea is actually profitable or not long term. Another cool thing you can do with this template is the time aspect. So you could actually see, you see right up here, you have the different trading sessions. You have the London session, the New York session, Sydney session, Tokyo and Hong Kong. And you will see that if you type in the time of your trade, let's do 11 in the morning, you will see that not 11 in the morning, but 11 a.m. You will see that the win rate of that trading session is 100%. So you will actually see through backtesting when is your trading system most profitable throughout the day, which trading session is the best session for you to trade. This is a great way to increasing the profitability and the win rate of your trading by only focusing on what actually works. What I like to do is when I do the backtesting here, I'd like to have different tabs down here. As you can see right here, I have one tab for Euro USD, BTC USD, and the Nasdaq, right? So what I do is when I do the backtesting, I have one tab for each pair, and I then have a results tab right here. So I keep this one right here as the original, and I do not edit that one. I make a copy of that one, I duplicate that one, right click and click duplicate right here. That creates a new one, and I rename that one results, and I then have Euro USD, BTC USD, and NAS. So I have added some random figures right here, and you'll see here that on Euro USD we have a total trades of 4, the win rate is 75%, and the cumulative R is 6. You'll see here that the analysis confluence right here shows that the 420 EMA has a 100% win rate, 50 EMA 66% win rate, the 0.618 75% win rate, and the 50% fib is 66.7% win rate. Now the results tab is, I use it like this. So I copy this right here, just copy it, paste it in here, go to BTC, copy that one, paste it into results, go to Euro USD, copy that one, and paste it into results. And here is the overall win rate and profitability of this system that we're testing on these 3 different pairs combined. Now, as you can see right here, you could be doing a lot of different things with this backtest template to test different things, and you can test however you want. The overall win rate of this right here that we've been testing is the average risk to reward is 0.6, the cumulative R is 7 out of 11 trades, and the win rate is 54%. Not that bad, right? But as you can see right here, the cumulative R for the confluence number 1 is 9R, and the win rate is 62.5%, which is much better than any of the other confluences. And when they all align, you have a 60% win rate. So this tells me that I should be focused on confluence number 1, which in this case is 4-hour 20 EMA, and when they all align. When it's these ones isolated, I should just ignore that, right? Because they have a much lower profitability. But all in all, this is acceptable result. That's the video. That's the breakdown of the RLZ Trading backtesting template. This is, like I've said, one of my most important trading tools. This is the reason why I have a profitable trading system today. It's all about testing and validating the profitability of your system, constantly working on that edge, and this is a perfect way of doing it. It's completely free. This is a gift for you all. Enjoy. Take care.